Hey, what's up, everybody? Welcome to episode number 159 here on season number 2. And today we are getting into the long-term mix and diversification. So these videos are meant for educational purposes only and not meant to be taken as financial advice. You are responsible for your assets and to properly protect them. So always do your own research. This question comes from a fellow. I won't pronounce his name because if you search it up on YouTube, or actually if you search it up on Google, it's pretty disgusting, so we'll just leave the name out of there. But anyways, it asked, what other ETFs would you pair with this? This in this sentence is in regards to the long-term mix. So I did a video review on the long-term mix, which is a ETF that's on Stash, which is basically an 80% equity ETF and 20% bond ETF. So there's a lot of different holdings in that actual big, huge ETF. What other ETFs would you pair with this? For me, it's hard to really say what you should pair with it, because I'm not you and I don't know how you're going to respond to that. Be the responsible party and make your own decisions and go out and do your own research. And I think that you do value my opinion, but there are other opinions out there as well. So go out and research those as well. So anyways, when it comes down to diversification, I really like that long-term mix. I get questions all the time from other people like, hey, I'm setting up a custodial account. What should I do, kind of thing? And I'm like, oh, here's kind of my personal opinion. If I was setting up for my son, I would put a huge amount into that long-term mix and just let it ride out. And they're like, what do you mean? I was like, probably 80% or something like that. And I'm like, because 20 years from now, even though it's 80%, if they blow up the 20% of their account that they can invest whatever they want into, then at least they still have 80% compounding for the next 20 years. Is still going to be a quite a bit of money. It's not going to be as much if it was a complete 100% account. If obviously this is assuming that the market continues to grow. So for me, a few different ETFs or holdings come to mind. First of all would be maybe exposing a little bit into real estate. Stash has a ETF called Real Estate Tycoon, and that exposes you to the REIT kind of sector. So it's not exposing you into equities, it's not exposing you into bonds, which is what the long-term mix kind of does. It exposes you to a different kind of investment, which is real estate. Also, maybe another choice would be all that glitters, which is exposing you into precious metal sector as well. So those are two sectors that are not encapsulated into that long-term mix. If I was looking to maybe add some more growth to my account or take on more risk, maybe adding some more single stocks to that portfolio, especially some single stocks that I think would continue to grow into the future. Another ETF that might be more risky than that one, or might be more conservative. So if you're like, you know what, I think that 80% equities and 20% bonds is not ideal right now for my account, especially maybe for the next 2 to 3 years, because I need that cash. I don't need it to fluctuate a whole lot. I might need it in a year to 2 years. And I would still like to see some growth. That's why I would like to expose into equities. But maybe I need to keep a little bit more safe. And so looking at just a strict bond fund to help kind of bring that exposure more into bonds, keeping your cash, less volatile, might be an idea as well. Especially if I was looking to keep it more conservative, I would look to a bond fund. However, in that same breath, instead of going towards the long-term mix, you could consider the aggressive mix or the moderate mix, because those ones are going to drop percentages for equities versus bonds. So at the aggressive mix level, you're going to get 60% equities, 40% bonds, and then so on and so forth. So if you're trying to find that middle ground, then maybe you could do that. If you're trying to find a middle ground between long-term mix and then the aggressive mix, and you want 30% exposure into bonds, well, then you could go ahead and maybe pick up another extra bond fund or an extra 2 different bond funds and try to bring it up to about 30% equities, 30% bonds and 70% equities. That's kind of just my thoughts, specifically as far as diversification goes. And then obviously there are other more risky ETFs out there as well. I can think of a few right off the top of my head, like Defending America. There's another one out called AIEQ. I think that one's pretty risky, like corporate cannabis, ticker MJ, and Data Defenders. I don't know what specifically that ticker is. I should know because it's one of my top holdings or top growth ETFs on that. on Stash. So there's a ton of different ETFs. I would like add a diversification with another ETF. Maybe pick something that you think is going to grow, or something that you believe in, or something that you like, and then a dollar cost average, making small deposits every week, month, bi-weekly, whenever you can, whenever seems reasonable. I think that timing the market, me personally, from what I've seen, timing the market is really, really hard. And for me, it never works out. I just end up an emotional wreck because I should have bought in the morning. Instead, I bought it in the afternoon, and I bought, which would have been the low of the day, buying in the morning versus buying in the afternoon, which is buying at the high on that specific day. That's not the typical trend. That's just saying that that's like an example. Anyways, we'll go ahead and leave it right there. I don't have a question of the day today because, like I said on the last few episodes, stuff right now for my family, and then also like kind of like my family's family, is really, really busy. We're running like VBS, Vacation Bible School, for my church, and so all of next week my morning will be pretty much taken up with volunteering for that. And so I'm trying to kind of like get some videos stacked a little bit, so that way when I go into that week, I can already have some pre-recorded to release. However, I will still have to be recording during that week, and so the live stream will still be happening. There will still be a morning gaming stream and all that kind of stuff, so feel free to swing by the channel next week and check it out. I'll be busy as all get out, but I'll still make it work at least. Anyways, like I always say, if you got a question regarding Stash, Acorns, Robinhood, M1 Finance, as well as general investing, business, Etsy, coaching, post those questions down below. Please don't forget to subscribe up here. Check out these two videos right here. And don't forget to check out this link right here. And as always, thank you for watching. I really appreciate it.